Hello. I may have said that the last video was the last video for the chapter, but this is really the last video for the chapter. Just a couple things on page 1125 to start off. One of the things that they talk about is the accumulated earnings tax. All right, the corporations know that when they're taxed on their income, and that would and of course include the dividends, because again the dividends are a debit to retained earnings and a credit to cash. So they also know that a lot of the senior executives of the company hold stock in that company, and when they receive the dividends from the company, okay, they have to report those dividends as income on their personal tax returns. So what companies might tend to do is to hold on to these earnings and keep them in their retained earnings account to avoid having the double, or at least the double taxation on the dividends. Okay, so the IRS says, okay, if you want to go ahead and do that, but then we're going to slap an accumulated earnings tax on you in addition to the regular income tax at a rate of 20%. Now, a company can avoid the accumulated earnings tax if they can make reasonable enough. There's a reasonable reason why they need to hold on to these earnings. For example, if they can prove to the IRS that there's a lot of expansion that they want to do, and that's why they didn't, pay the earnings out in cash in the form of a dividend, they can avoid the accumulated earnings tax. All right. There is also a personal holding company tax. You can read about that. Okay, that is where a company is formed primarily to absorb income in the form of dividends and interest, all right, from other companies. That's why they call them holding companies, all right. And then the last thing is the corporate alternative minimum tax. Okay, this is somewhat similar to the individual alternative minimum tax, but in this case, the corporation is not subject to it unless their annual gross receipts are $5 million or more. Okay, there are some tax preferences and adjustments that you can look at on page 1126. Again, most of the smaller corporations that you would deal with would not be subject to the alternative minimum tax, so this is just really for reading purposes, and there are no questions on the next test involving the corporate AMT. Okay, thank you.